Right, so in this video, we're going to take a look at the dollar-yen 1 hour time frame. There is a Cypher trade opportunity for us. So let's go to the charts and take a look at that together. Before we do, remember to take advantage of the free trader assessment below. I'll leave a link to that. Go to the page, check out more details of what that entails. All right, let's go take a look at the dollar-yen Cypher trade. Pattern. Let's go. Real quick, this is my starting point up here, right there. So we have a swing high to swing low right there, and then we've got a pullback here. Yeah. First thing we want to do is take out our Fibonacci retracement tool and measure it from our swing high all the way down to swing low. Now with the Cypher trade, what I'm looking for is a pullback all the way up into 382. We get that there. We're going to drop this on here as well. So we come up into a 50%, right? So we got our minimum requirement. Yeah. So price action pulls back to our 50%. So criteria 1 is met for our Cypher trade here. Now with the same leg, so this high to this low, with the same leg right here, we are going to grab a Fibonacci extension tool and take it from this high to this low and back up in, right? So swing high to swing low, back up in like this. Now what you can see here is price action came all the way down and is pressed all the way down into our 127 Fibonacci extension. Now as price action does do that, we hit our criteria 2. So condition 2 is met here. So price action, push all the way down into our 127 there. So number 3, what we're taking a look at here, where price action is right now, where we're trading at 147, 398. We grab a Fibonacci retracement tool yet again, but now we are taking it from this high to this low. So full leg of the move here. And we're going to identify our entry right here. So let's grab a Fibonacci retracement tool and take it from that swing high all the way down to this swing low. As you can see, we're just shy of entries right here. So it's just before the 786. We come up, almost hitting our entry. Where is my entry? Well, in the live trading room, we have the same entries right here. So there we are just shy of hitting our limit order to get involved in this trade. But it is still there waiting. If we can get a little bit more of a pop, then we are going to short it towards the downside. So we had number 1 met here, then we come all the way down, number 2 met, and then number 3 is a CD completion. Again, we're just flirting with it here, up to a 786 right there, right? So here's what it would look like if I grab the triangle tool and draw it in. So we have our X to A right there, A to B, B to C, and C to D, all the way up into a 786. This right here is our Cypher trade on the dollar-yen 1 hour time frame. Yes. Now, let's take a look at our entry stops and targets. So here is our entry. So it's just before the 786 right there. This is where our entries is. Again, it's just shy of that. Now, where are our stops going? I'm going to grab this actually. Short position right there. Okay, short position right there. Now, oops. Down, back to where it was. Excuse me. Right. Short dealer thingy right here. Now, stops are above our X point looking left. What is the significance of that? Well, if it does, if price action comes all the way up here and moves above our high right here, our X point looking left, then I want to get out of the move, right? Yes, not every single trade is a winner. Shocking, I know. Disclaimer. This is about 65 to 70% accurate, right, with our Cypher trade here. All you need to do is take the rule set and go and test it yourself. Verify those numbers for you, right? This is what we've got in our historical data. Now, with the Cypher trade, there's a slight inverse risk to reward profile. But over time, doing the process and knowing our averages, we know that over time, this is profitable. Therefore, every single time that this sets up in the markets, we want to take this trade. That's exactly what we're doing here, right? So again, the significance of a stop is if price action moves above our X point looking left, we want to get out of the position. This is also known as cutting your losses. That's why we use a stop placement. It means that we are wrong on this initial trade right here. If price action moves up towards our stop, we are just going to get out of it and look for the next trade opportunity. Okay. Now, where are our targets going to be? We will take a Fibonacci retracement and we'll take it from this low up to our entries right here. So we take it from swing low all the way up into swing highs right there. And our target is going to be at a 382. So we're just going to get that above the 382 right there because we want to front run our orders, right? Why? Because if price action comes down and it doesn't quite go all the way, we want the highest probability that we are going to hit targets. And also, we want to make sure that we account for the spread as well, which ties into increasing the likelihood that we hit targets. Very important. Now, target 2, if we get a move back down into the 618, then we will hit target 2. And that's what, in a perfect world, that's exactly what we want right there. Yes. Good. All right. So target 1, we have a 382 from our Fibonacci retracement, and target 2, we have a 618 right there. Again, we're just shy of this entry here. We will wait and see what happens with this. And if we get a move into our CD completion, we will be short, and we're looking for a target 1 there and potential target 2 right there. And of course, just to recap where our stop is, just above our X point looking left, just like all patterns that we trade. Okay, so that's my trade opportunity for today. With the dollar yen on the 1 hour time frame, we have a Cypher trade opportunity here. Just to, before we wrap up, just to hit on the trade management, what we've got is if we come down and hit target 1, it's exactly like we do in the live trading room. You take off half of the position because we trade 2 contracts here. You take off half of the position and you roll stops to break even. And then you just leave it, set and forget. And we're looking for follow-on targets down into target 2 there. Now with this, knowing your averages, putting the trade on, getting involved, we've accepted this risk. That's what we've done. So once we get involved in the trade, we've accepted the risk, that money's gone, and then we wait. That's all we need to do, right? Knowing this, price action is going to do 1 or 2 things, hit our stop or hit our target. That's it. If we continue to trade in that way, we can let our averages play out, right? And historical data tells us that our averages has an edge. So we have a positive expectancy trading this pair, trading this time frame, and trading this strategy. All we need to do is be patient, come into the markets every single day, and be disciplined in following our trade plan and executing this trade every single time it sets up. and let the averages play out. And all we need to do is come into the markets with daily disciplines practiced daily to continue having that edge without trading. So again, Cypher Pattern on the dollar-yen 1 hour time frame. We'll see what happens with this one. If you like this style of trading and you want to learn the language of the markets, just hit the link below, sign up for our free members area called the Star Classroom, and enjoy the training, enjoy the material there, go out and use it and start getting incredible results for your efforts as well. Until next time, be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much.